Good afternoon, traders. This is Nick Mastrandrea with Market Tea Leaves. Here to talk to you about one of the things that we like to do in Market Tea Leaves is we do like to conduct interviews with individuals and people that we feel are leaders in their field, if you will. Now, today we're going to be talking with a gentleman named Carl Weiss, and Carl Weiss is the architect, if you will, for algo futures. Basically, a lot of folks these days are talking about order flow. You know, a lot of people are talking about it. A lot of people have different types of strategies in terms of handling it, etc. Some people use audio, some people use visual, etc. But I can tell you as a fact that Carl and his team, they actually live this stuff. They are, in my opinion, the originators of a solution that any trader could use as it relates to order flow. And additionally, they are people that I consider to be leaders in the field, and obviously I have a lot of respect for them. Just as a this is a case in point, I use their charts myself. It's not the only solution I use, but clearly and certainly is a key one that I use. So, Carl, you came from a programming background. How did you get involved with trading? How did that happen for you?
Well, first, Dick, I just want to say thanks for having me on, and thank you for the interview. I appreciate your work, and I appreciate the kind words you said about, some of the order flow algorithms and the output and offerings that we have. So I come from an IT background. I've been in IT for about 2 decades or so, or IT being, software development.
Sure.
And I've always had a bit of a bug in trading, the bug for trading. When I was a kid, I remember going through, like, the newspaper, and used to read the tables,
Wow.
the stocks, and I would watch different stocks. My grandfather had given me a couple of shares of AT&T when I was born, so I followed AT&T.
Wow.
And my brother had Tampa Electric, so I'd follow that. And even as a 7 or 8 year old, I remember Playboy being a publicly traded company. And I used to remember checking every day what the price for Playboy was when I was 8 years old. Back then everything was in quarter increments. 8th increments. So when you read the papers, we didn't have the decimalization that we had today. But in terms of programming and getting involved in code, around a decade ago, in 2003, I was trading the NQs. So that's an E-mini contract off the Globex servers. And I had studied volume spikes in the spiders a lot. I used to trade a lot of volume in the spiders, but I was transferring over to the E-minis. And I noticed that volume spikes in the E-minis for the NQs really didn't behave like, I had learned they should behave in these classical books. A volume spike after a surge meant a reversal, right? That was always exhaustion.
Right.
And I was like, well, why is this one spike in volume on the NQs turning the market, and this other spike in NQs is just making a continuation move? So I started looking at the data, and I started looking at the volume, and I was using TradeStation at the time, and you really couldn't get under the hood there and look at the data. It's just plain volume. I wanted to start looking at the bid information, the ask information, the order book depth information, and all that. So just being curious, I started to dig deeper and deeper and deeper. And I started writing a lot of custom tools to start looking at this data just to satisfy my curiosity about what's going on with these NQ spikes, and how would I know beforehand or in real time whether the spike was a reversal or was a continuation. And that's what kicked it off. So that was in December, I think, of 2003, and I haven't stopped coding to answer those types of questions in coming up on a decade.
Were you using, just out of curiosity, were you using like the TradeStation Easy language at the time to do all the
I started with easy language, but after a couple of days of mucking around, I realized that you can't get at the depth. You can't get at granular data with easy language. So we kind of moved away with that and started building custom tools and using a little better data feeds and going that route.
Interesting.
And what you see a lot of now, like a lot of the information that we surface in Skeeto and Follow the Bots, is just an outgrowth of the curiosity that I've had from, what's under the hood there, what's going on. And we just kind of got lucky because, as I went to the E-minis, a lot of people went to the E-minis. As I started writing code and programs, algorithmic, intellectual property, so did a lot of other people. And what we see now is that E-mini contract is really just managed. They say over 70% of all the contracts in the E-mini are managed by automated trading bots.
Sure.
So having the software to follow the contrails of these bots is just a really cool way to be able to look at the data in real time.
So how did Skeeto come about? I mean, I know you've had a background in IT programming. You know, you come from the software world, etc. How did you how did you formulate Skeeto, or how did all that come about for you?
So Skeeto actually came out of failure, of real failure. So, you know, we spent a lot of time and a lot of years, and a lot of money writing all these algorithms, and started a corporation, I think, like in 2006, Algo Futures, because I was having an ongoing R&D spend to write all this code, and I said, we should probably put this in a corporation and try to make money off of it, besides my own trading. And we had all these wonderful algorithms that we developed, and I started knocking on the doors of the big shops, you know, the big name banks and trading firms and prop firms, and we really got nowhere trying to either become a hedge fund or sell to hedge funds. And I found that nobody wanted to talk to us because we really weren't heavily backed with capital. We didn't have a very long trading record. We couldn't afford all the regulatory filing documents that we needed to become a hedge fund. You know, I have no formal education in IT. I picked this stuff up as I've learned. I've never worked at a hedge fund or an investment bank. So really, nobody wanted to talk to us. So one day, I said, why don't we just make a retail offering? If the commercial folks don't want to know from us or they want to stay dark, let's just make a retail offering. So what we did is we created Skeeto. We said, let's take a subset of our algorithms and our output that I was using and a couple of my trading firms were using, and let's just put it out there and inject our data into NinjaTrader or TradeStation or Sierra Chart or MultiChart, and let other folks, the small mom-and-pop traders, the small retail traders, get access to some of the same type of high-end algorithmic information that the Goldmans and the Citadels of the world have access to.
Interesting. That's amazing. And in hindsight, that was probably the wisest thing you could have done, because that market, you know, over the last 5, 6, 7 years, you know, from what I know about it, has grown tremendously, from what I gather.
It is a sea change. I think there's a consciousness about order flow now. You know, like that buzzword, like HFT, is part of everybody's language now. Sure. 2 years ago, 3 years ago, if you said HFT, you go, what? Yeah. But now even at cocktail parties, you know, dentists are talking about HFT. So
yeah,
it's a lot about being at the right place at the right time, I think.
That is very true. That is very true. You know, in the trading world, we talk about fundamental versus technical analysis, and I recall even from my days, you know, being a former Series 7 guy, you know, there was a controversy about this even then, and that was going back more than 10 years now. Do you, in your opinion, think that one has priority over the other, or do you think it's a combination of both?
That's a great question. You know, see, Nick, because I read your commentary, and you look at a lot of fundamentals.
Sure.
I never look at fundamentals, but the traders I know I've met a lot of traders through Algo Futures and through Skeeto. The traders I know who are the best traders, and when I say trader, we're talking about short-term guys, you know, 2 minutes, 20 minutes, 2 days, you know, like that kind of trading time.
Sure.
The guys who are the best, the guys who I know make money the most consistently, are different from me. They do, in fact, take in fundamental analysis. And I think they do it, I've seen a couple of different paths. Like they say, the ADP report was bad. So if the market sells off, I'm more confident in following the technicals to the downside.
Right.
So they use the fundamentals not to say what is the value of the S&P 500. Are we at a good value, or are we, you know, is the value too rich? But it confirms the market move. And then I see your correlation stuff. And I say, oh, so I'm a little lazy when it comes to that stuff and doing my homework. So I don't use fundamentals, but by and large, the better traders that I do know do actually use incorporate fundamentals into their technical analysis trading.
Well, but by the way, I thank you for that. I appreciate that compliment, because we do try and do that. We don't give like a we're not a service that's going to turn around and say, you know, buy at this level, sell at this level, etc. We're more concerned with the overall general market direction. And my goal and objective is very simple. I like to keep my followers safe. I want them to hang on to their hard-earned trading capital, because it's not easy to replace. And we all know that. You know, we've all been down that road in one way, shape, or form. So I think that that knowing or understanding market direction as you say, can be used as a prelude to decide, okay, well, if we know it's going to go short, let's take a look at our technicals and say, where do we get in, where do we get out? Or if we know it's going long, where do we see a short-term bottom? Where do we think we can go and get out there? That's really my goal as well. I mean, my goal with market correlation is to do the exact same thing. So I appreciate your compliment.
You see, that's the cool thing about your offering, Nick.
Mm-hmm.
That idea of the correlated market and not correlated market, well, you put that in your commentary every day right up front. You know, you give a description, your heads up, this is what's going on in pre-market, and then you're very explicit. This is a correlated market, or this is not a correlated market.
Exactly.
And that one piece of information that you do your homework for, and then you distribute that to people, I think is one of the, you know, out of everything I've seen out there, it's one of the most ingestible pieces of information. Because there's all these financial blogs, there's all these, you know, news channels, there's all this information, but how do you incorporate that? But I could look quickly and say, oh, Nick thinks it's a correlated market, or Nick thinks it's a correlated market with this caveat that's explicitly stated. Then I go, oh, and that saves me. The reason it works for a guy like me who is a little lazy, I don't want to do my fundamental analysis homework. I can just pivot to you and look, oh, what did Nick say this morning? And,
Thank you. Thank you for that.
You enable me to be lazy in that regard, which I like, because you know, people are busy. People don't have 2 hours in the pre-market at 5 a.m. to go through the data and look at currencies and oil and gold and the dollar and the yen and what happened at the European Open. I mean, it's a lot of work to start amalgamating that every day in real time. Thank
you. I appreciate that. I definitely appreciate that. Followers, I hope you listen. I hope you heard that. Well, I guess you mentioned it earlier in terms of HFTs, algo tradings. I guess what are your thoughts concerning it, and how do you feel that, you know, this whole thing came about? Because 5 years ago, you know, as you said earlier, I mean, no one ever heard of HFTs. No one ever heard of algorithmic trading yet all over the place. I mean, it's just like out of nowhere. This thing just popped up out of nowhere, and where did this come from, you know? I think a lot of people are scratching their head trying to figure that out. I guess, what's your thoughts on that?
Well, you know, let's go back. You know, if you look at the continuum of software development in the industry, you know, we go back to program trading. There was a hard definition of program trading all the way back to the 70s. I don't remember it exactly, but it was like if you buy a basket of the S&P 500 and arb it out, there was like that's what program trading was. Like the guys used to arb the basket of the S&P against other stuff, and that was program trading. And it's been off to the races ever since then. Then the Black-Scholes came in for the option pricing, and that was all done, you know, programmatically. And then you know, we went from the pits to these electronic exchanges. And once that really took hold, and the tool sets were out there that people could write a piece of software and then automatically send their orders, and everything gets executed and bypass the pits and the floors, you know, it's just gone exponentially just as the whole software and internet and technology has grown. So there is the consciousness of it where, you know, it gets talked about in the media. We had the flash crash. Remember the flash crash we had?
Yeah, sure.
You know, that's going to help with the consciousness. But, you know, people have been gaming the market for the last 30, 40 years with these electronic bots. It's just that it's become so pronounced. And there's so much volume on the electronic exchanges versus the pits that I think people are becoming more conscious. And, you know, it's not going anywhere. It's here to stay. What surprises me is the lack of regulation here in the United States. Like, we had the flash crash. That was a year and a half ago, 3 years ago? I don't remember.
3 years ago, May 2010.
May 2010, right?
Yep.
Coming up on 3 years?
Yes. Yeah.
What's the follow-up, you know? So, you know, we had, was it January? We had a mini flash crash in the overnight. Remember the S&P went down 40 points in the overnights.
Yes. Yeah. Oh, yeah, I remember that. Oh, God, yes. That was, I think that was like the end of last year, around December, or just before. Was
it December? Yeah, and I remember that. I'm like, we saw that thing happening in real time. It was boom.
I know,
and then the low tick, you could see the buy programs come on. I think a lot of people got hammered, but I think there are a lot of people making money off of these. Like you heard, these mini flashes are all over the place in the equities market.
Right.
So I think that there's a financial incentive for some people, some prop trading firms or quant firms to induce flash crashes. I think that what we see a lot is, you know, there are these like known areas of stops, and it's my belief that a lot of guys have firepower. Like algorithmic firepower that will light up the market, will run orders through the order book, will execute what's in the book in order to flush out the stops 2 points away or 5 or 4 ticks away, and then turn their orders around in that stop flurry. It's like a stop hunt. Turn it around, and then they're cashed out. So we see that stuff going on, and it's never going to end. And, it'll shift if there is some sort of regulation with the spoofing of the orders and all that.
Well, yeah, I think that the worst that happened after the flash crash of 2010 was I think the SEC stepped in and they fined these brokerage firms. I think it was like, I don't know, $5 million, maybe $9 million, whatever it was. But you know what? In my opinion, that's kind of a pittance for them because, yeah, it cost us $5 million or $9 million or whatever it was. They made hundreds of millions of dollars, if not billions of dollars, for the last 5-6 years doing this kind of stuff. So, from their point of view, it's like, well, it's the cost of doing business. And, they kind of view it that way.
Well, you make an interesting point because remember we were talking before this call, you and I were just going over the market, and you were like, Carl, I'm seeing this in the pre-market. It's easy to move the market in the pre-market. If you want to fire off some programs to buy or sell and move the market, it's easier when there's less liquidity. And we see that overnight. You know what I've noticed? This is really interesting. If you've been around a while, if you were a short-term trader, a swing trader, there were these really classic swing trades that would last like 3 to 5 days.
Yep.
That's a great swing, and everybody wanted them. But then there was that overnight risk thing. So if you were a day trader, you're like, I'm a conservative guy. I think day traders tend to be very conservative because I want my money in cash when I go to bed.
Exactly.
So the swing trading opportunities were always, attractive, but there was an element of risk that people didn't want to take.
True. Sure.
What I was seeing lately, and I talked to a buddy about this the other day, we said that the classic swing trade where you have that big move is actually seems to be invoked from like 3 p.m. Eastern to 6 or 8 a.m. Eastern.
True.
The classic swing trade period has become an overnight trade where you buy in the afternoon and you sell in the pre-market. There's an element of risk now, but I think that's all because of some of these guys with the big firepower. Can move the market where they want it to.
Well, then that's an interesting point because if you look at overnight trading, and again, I'm not necessarily an overnight trader. I have done it in the past, but it's not something that I advocate very much. But one of the things I've noticed myself is in the overnights, you see these nice, great trending moves.
Exactly.
You see these nice, great, and you know what? And you say to yourself, where the heck were they all day today? It's like because there's so much volatility built into our markets with news events, or who's going to be talking, who's going to be speaking, what they're going to be talking about, etc. That it just lends itself to so much volatility. Where yesterday is a case in point. Dow Jones Industrial Average up, down, up, down, up, down, up, down, and it was like, how can I figure this out? There's no real trend here, It became somewhat of a big shop, so to speak. But on the overnight session, you see these nice, great trending moves, etc. The one thing the one thing a trader needs to be concerned about is if you take a look at what happened a couple of days ago with the Japanese yen, with the Japanese market. Now, all of a sudden, they're throwing a lot of liquidity at the Japanese yen, and that thing just plunged. Like, I've never seen it plunge like that before, 400 or 500 points. And then you wake up the next morning, you look at the U.S. dollar, and it's like sky high. And it's like, what's going on here,
That's right. There's that added risk for the overnights, but there is an added benefit. So
Sure.
I think it's a very ripe area for people to focus on. And you know what you mentioned, like in terms of like those moves, they're very clean moves. So if you use a trailing stop, if you have an automated trailing stop that says once this thing pulls back 5 ticks, stop me out. You look at the retracement patterns in the S&P, in the ES, in the overnight, you can go 20, 30 ticks without a 5-tick pullback.
Wow.
Which to me is remarkable.
That is.
That's happening almost on a daily basis or an evening basis in the overnight. Yeah. So there's a lot of ripe opportunity in the overnights at this point.
Interesting. Your point is well taken there, Carl. Very well taken. What are your thoughts? I know that you and I have talked about this before, but I guess for the benefit of the listener, benefit of the audience itself, what are your thoughts concerning things like binary options, bull spreads on binary options, etc.? What do you think the future holds for that?
I think the binary options are going to be the next big thing. I think that they're going to dwarf the E-mini products. I think it's going to be the biggest financial product revolution we've seen in decades.
Wow.
You know, if ever. It is going to be a monster. Because binaries, I think binaries are going to taking hold with the day trader community, but I believe that the adoption rate of binaries will go and bleed beyond the day traders, and it will become a pedantic lottery keynote type product for iPhones.
True.
So that space in the United States where you can't gamble on your iPhone, it's illegal. But if you're waiting for the bus and you've got your iPhone, or you're sitting in traffic and you got your iPhone, hopefully you're not driving with me when you do this, you can trade your S&P 500 binaries, and that's your lottery ticket. You don't have to drive anymore to the general store to get your lottery ticket to scratch and sniff. You can play binaries all day long. So I think that that is going to be such a sweeping product. It's going to be, you know, not a lot of people know about binaries right now, but in 30 months, the dentists who are talking about HFT now, even beyond them, will be talking about binaries.
Yeah, I mean,
what's your take on that?
I would concur with that, Carl. I would have to concur with that, and the reason why is because it's very, very simple. It's very, very easy.
Exactly.
The binaries themselves are, you know, it's a yes or no type decision in reality.
Yeah.
And the other thing too that I think is very good, I think there's going to be a lot of misinformation about it. I think there's going to be a learning curve for people to get their arms around it, so to speak. But the other thing that I like about it is your risk is known up front. It's almost like trading an option in the general markets, except that you don't really have to be concerned about, like, if you go out and buy, let's say, a call option on something like Adobe, you have to take the price of Adobe and multiply it by 100, because all the lots are 100 share lots. With the E-mini binary options, I mean, you know, every point is $1. So you have a floor, you have a ceiling, you know what your defined risk is, and that's all you're risking. You don't have to worry about, you know, $500 margins. You don't have to be concerned about, well, if I go 10 lots, well, that's $5,000 I have to have in my account. Well, you don't really need to be concerned about that with binaries, because there, if you're taking if your ceiling is, if your floor, let's say, is let's say 10 ticks away from where you're trading it at or where you're getting in at, well, you multiply 10, you know, 10 times every contract, well, $50, or, you know, $100 or whatever. But the upside potential is huge.
You bring up a really good point about that, like the limited risk, because what if you have a spike, like this errant spike that's caused by some bots in the S&P, and you get stopped out on the E-mini because of that? You won't get stopped out.
No.
On, you know, some sort of like move that you see in the S&P, you won't get stopped out in your binary.
That's true. That's very true. Because
and I think that's going to be attractive to a lot of traders.
It will, because a lot of times what happens as traders, and we've all experienced this at one point or another. You know, we do our TA, our technical analysis, we do our fundamental analysis, and we decide, okay, well, we're going to get in here. And we get in. The order gets executed. And, you know, it's going along. All of a sudden, you know, some massive down spike happens, and all of a sudden we get stopped out. 5 minutes later, it's going in the exact same direction that we thought it was going to go into, and it's still going, you know, to the point where we want to get out and beyond. And now all of a sudden we say, what the heck, what just happened? I got stopped. How did that happen? You don't have to.
See, that's the beauty of it. So I think the product, like, you got a guy who's trading, he's at work, he's busy, he's trading, he's trying to juggle it. And I know a lot of guys who day trade at work. And that binary option product gives them the peace of mind that they can, all right, I put my position on, but I'm in a meeting, I have other things to focus on, but I don't want to not trade.
Exactly.
It's going to be unbelievable, the binaries. Once people understand, like, what a powerful tool it is, and, you know, now that it's being traded in the UX by Nadex, that, you know, it's a regulated exchange. I think some of the offshore stuff, people are a little iffy of the binary options offshore, you know, from exchange out of Isle of Man. But Nadex, you know, it's going to be bananas.
Yeah, it's a U.S. exchange, and it's regulated by the CFTC.
Yeah.
And the CFTC they're very, very strict when it comes to regulation. More so, I think, in my opinion, than the SEC. More so, the SEC is like they're asleep behind the wheel.
You think?
Yeah, exactly. You ask any broker who's a CFTC regulated broker, like the folks out of Chicago, And they will turn around and tell you, every single day we've got to count for every dollar. We've got to count. We've got to prove to the CFTC that we're liquid. Now, every single day I couldn't imagine the SEC doing something like that with anybody else. I mean, they don't do. The only time they get involved is, there's a problem. Oh, by the way, we just had a flash crash. There's a problem,
Right. Let me stop watching porn for a minute, and I'll.
Yeah, exactly. Yeah.
Wasn't the SEC? Those are the guys. Didn't they get pinged for guys watching porn in the office on the SEC?
Yeah. Exactly. It's unbelievable. Really. You say these guys are asleep behind the wheel of a truck, and it's going down the road at 80 miles an hour with no driver. It's unreal. But no, it's very true. And the other thing, and I think you bring up a good point too.
Wait! Did you hear this about the SEC?
What's that?
I don't. You read these news articles. I'm not so clear on everything. But just in the last 3 months or so, I think the SEC finally signed off on buying a system that will get them real-time quotes. As an institution, they don't have real-time access to the market.
That's unbelievable. That in this day and age.
So they're doing a pilot system or something to find out what's going on with the quotes in real time.
My God. You know what? Nothing really surprises me anymore, Carl. Nothing shocks me or surprises me anymore. That's unbelievable. But the other thing too. See, the other thing about the binaries I kind of like too is that it's you have some choices in terms of how long you want that particular contract to expire. You could have like a 2-hour thing, or you could have a half-a-day thing, or you could have an all-day thing. So you could turn around and say, well, first thing in the morning, well, I think the S&P is going to go up, so I know what my defined risk is. I'll place an all-day type of contract with them or option, if you will. And then basically, you just let it ride. And at the end of the day, hey, look, you could either be in the money, you could be out of the money, or you could lose what you put up for risk. But that's it. Your risk is defined. It's not like you said earlier. You're stuck in a meeting. You have things to do. You have phone calls to make, etc. You don't want to be looking at the market like every 2 seconds.
That's right. Not everybody has, full screen time all day long. They have other things going on. With some of the alerting services and, iPhones and all these things, it makes day trading portable, readily portable and safe,
Very true. Very true.
It's going to be awesome.
Very true. Interesting. Let's see. Now I'm looking at this. You're showing me this nice, beautiful chart. All right, and it's got like follow the bots on it. All right. So I wanted to query you about that, and wondered if you could shed some light on what this is.
So this is a 5-tick chart. 5-tick range bar chart in the forward E-mini S&P 500 futures contract, and you're looking like at a beta prototype. We're still cleaning it up. We expect to launch this in about a week or so. But what it does is it gives the user, the consumer of this information, just some ready information about order flow and bot activity in the E-mini, in the S&P 500. So here at the bottom we have what we call MacDaddy, and MacDaddy is our proprietary order flow momentum algorithm. And it's pretty easy to read. It's you can think of it as order flow momentum. So when you see like a higher high in price followed with a higher high in MacDaddy, you know that the order flow momentum is increasing. So likely price will increase.
Right.
And if you see like a lower low in MacDaddy accompanied by a lower low in price, you would expect price to continue down, and it does. And these little things where we have the words all places like a high frequency trading buy surge.
Wow.
And we believe that if all changes in price are predicated by changes in supply and demand, whether that's for real estate or bagels or stocks, it doesn't matter. That's the law of supply and demand. In the electronic markets where you have order flow, changes in supply and demand are predicated on changes in order flow. And changes in order flow are really predicated on the bot activity, the trading bot activity, the high-frequency trading. So what we do is we monitor like the contrails of these trading bots, and this is like HFT, a high-frequency trading sell surge.
Right.
That's a sell surge by the HFT, and that's going to push the market down. So this is just a quick tool that users could have. It's a web-based tool, and they can see, this is what's going on with order flow, and they can align their trading in real time to the bots, and just really instead of fighting the bots and fighting the tape, our whole mantra now is don't fight the tape, and the tape has evolved. Now it's the trading bots. So we say follow the bots.
Exactly, exactly. Now, is this a 5-minute chart that folks are looking at?
This is actually a 5-tick chart. So
Oh, it's a
each
5 tick. Okay,
bar
good.
from high to low is only 5 ticks.
Okay.
And when price moves beyond that, it starts a new bar. And it's a very good way to align changes in order flow with changes in price. We think it's a very easy way then to help with your trading.
And also, I guess it keeps it more real time as well, as opposed to waiting for an entire 5-minute bar, to do its thing. I mean, this is more, I guess, a bit more online real time, so to speak, because you're getting to see it live as it's happening.
I think so. Like for me, in my eye, and a lot of traders I know, we tend to like these kind of bars that are not dependent upon time to update, because we're not really trading time, we're trading price. So all we really care about is the changes in price. It's just surface the changes in price. And if it takes an hour to change price, that's fine. If it takes, a lot goes on within 20 seconds, well, we want to know that too. And it's just about offering, as discrete and granular pieces of digestible and usable information as possible.
Very true. Very true. Yeah, see, I have a confession to make. I mean, I do use the Skeeto charts, if you will, but I'm still using on a 5-minute a 5-minute type of thing, only because of the fact that sometimes with range bars they move so fast, and we're in a real fast moving market. It takes me a little bit while. It takes my mind at least a little while to analyze the data. So for me, I have to confess, I still use a 5-minute chart, but they work perfectly well. I mean, if you know what you're looking for, they're perfectly fine. But this is a bit more, real time, etc. Particularly for volatile markets. Like what we saw this morning, where we had a not so stellar jobs numbers report, and the market just dropped like a rock. So it can kind of give you a better alert in that regard, as opposed to having to wait 5 minutes for it to happen. So there's pros and cons to all things, I guess. But that's very interesting. Now, do you have anything else? I mean, I noticed that we're looking at the chart on the follow the bots. What else do you think that follow the bots is going to have that is going to be useful to a trader?
We're going to have real-time broadcasts sporadically throughout the day. So there'll be a live broadcast where you'll see my colleague Billy Durier's trading screen or his charts, and he'll walk you through not only the market structure, but what kind of trade setups he's managing right now. We also have a trade status monitor where we document in real time our analysis of the market, and this is updated in real time.
Wow.
So people can see, what's the first trade of the day Friday for today. That was sell the breakdown at 1546.
Right.
And then we monitor Friday the trade of the day. What's the conclusion for the short-term target? What's the long-term target? And then some trade comments. And these are all little hyperlinks. You can click this or right-click and open a new tab, and that'll give you very discrete information about the trade. There'll often be just a lot of breakdowns. So if you want to read, you can read to your heart's content. And the second trade of today was buying the pullback around 1534. Today was a good day, really winning. Billy's updating the trade status monitor in real time, and he's just killing it. And he's actually writing his thoughts in real time, so people say, now I understand the logic to the trade. Now I know why I'm buying the pullback. Now I know why at 1534 I should be comfortable at this. What would happen if the market then pierces 1534? What do I do? What if the market moves up? So, this is the kind of information that we want to surface in real time, just to help traders out.
Yes. Okay. That's very unique. That's extremely unique. I like that concept. That's very good, and certainly very useful to any trader out there, without question. So, any future endeavors for you folks at Skeeto and Follow the Box?
Well, Follow the Bots is coming out next week, and then we hope within like 3 months or so we're going to have a binary options offering, and then probably also some automated trading offerings. Good, excellent.
I know you have a lot of dragons to slay, without a doubt. No question about it. There's always a new world to conquer, without question.
You know how it is.
But it makes life very interesting. There's no doubt about that. It does make life quite very interesting. So basically, I guess from my end, Carl, I mean, I thank you for your time. I appreciate the fact that you took your time out of your very busy schedule and very busy day to talk to us. And certainly I know that my followers, my people at Market Tea Leaves, will get something out of this. And my hope is that anybody viewing it will also feel the same.
I hope so. I want to thank you. Yeah, thanks for having me on. Nick, I really respect your work. I learned a lot from you.
Thank you.
I've learned a lot about market correlation,
Mhm.
and there's a lot of nooks and crannies in there, and you make it very easy for me to go, oh, now I know. You're actually teaching a man to fish because I see the same examples and the same logic every day from Nick. Oh, okay. This is exactly what he said 3 weeks ago. This is exactly what he said 4 weeks ago. Oh, okay. It's the thing. I got it. I got it now. $1 gold. Okay, I got it. Oh, oil's not playing nice. So I just appreciate what you're putting out for people. I think it's a great service.
Well, no, I thank you for that, Carl. I absolutely thank you for that. I appreciate the compliment. So, folks, that was our talk with Mr. Carl Weiss of Algo Futures. Feel free to visit their website. Take a look at what they have. They do offer a free trial. I think it's a 10-day trial, Carl? Are you offering?
It's a 10-day trial, yeah.
Right, 10-day trial. All right. Test drive it yourselves. See whether or not it has any merit, any value for you, and our hope is that it can help you in your trading. Thank you very much, folks, and thank you, Carl. Appreciate your time.
Thank you, Nick.
You take care.